Top three things. Number one is the yen. Number two is Russia. And number three is sentiment across global macro futures and options data. And I'll get into that last. But first, if you hit on the Japanese yen, which is one of the things that we reissued last week, which was a short selling opportunity or sell the bounce call in the Japanese yen. And you're going to get a lot of sell the bounce calls from us this week, whether it was junk bonds into the end of last week, whether it was the Japanese yen. It's still the same thing, which is a big macro deflation trade. So again, Japanese yen down again this morning, down 0.3% after falling steadily after it really signaled overbought last week. So again, follow the bouncing ball. You short the yen, you actually buy the Nikkei. So forget about like trading around in the US equity futures. It's much racier to just buy the Nikkei. So again, we're long the yen and, we're long the Nikkei in yen terms. Second thing, Russia this morning having a bounce. And again, you learn a lot about bounces during crashes. While it is newsy, and again, the newsiness of it all really capitulated into the lows of the Russian stock market lows last week. You're up like 4% off the lows, but again, still down 42% for the year to date. Now, those of you who understand drawdown risk, if you bought it at the beginning of the year, that means you don't have to be up 42% from here. You have to be up what? You have to be up 72% from here. So again, understand how the math works. You can go down 42%, then you have to be up 72% to break even. But again, the Russian stock market would have to close above 910 on the Russian trading system index to get anywhere north of bullish trade. And that's just immediate term. The trend obviously is decisively bearish. So again, another short selling opportunity potentially in Russia. We haven't hit the button on that yet. Finally, consensus. Listen to this. Futures and options positioning, and again, I look at this every week very closely because it's a great consensus macro look that you can fade. So in other words, it's a contrarian signal. Last week, they took the S&P 500 index and E-mini options up to 153,000 net long contracts. This is like, never mind being up what it was week over week, which is up 104,000 contracts. It was into expiration, which is a little fishy. It was into year end, and versus the 6-month average. The 6-month average, by the way, in S&P index and futures, if you look at that position, it's a negative or a net short position of 10,000 contracts. Now it's plus 150,000 over 150,000 net long. That's unbelievable, but believe it, that's what happened into year end, and it is an absolutely fadeable move at a higher level in the S&P 500. We have not yet hit the button on that. But I'll give you the risk range on that in a second. Those are your top three things.